What's going on, everybody? We've got JT here, we've got C Will tapping in, we've got David over at Crypto for Change, and we've got a fantastic guest joining us for the second time over at the next block. We have Mark Yusko joining the show. Today's going to be a fantastic episode. We want to talk about inflation, recession fears, overall market sentiment, crypto, and who knows where else this conversation will take us. So I want to thank Mark for taking the time to come on the show today, and let's get at it.
No, great to be here. Thanks for having me back. I always say, having me on a show, no big deal. Having me back, that's something. So that's good. It means I didn't mess up too much.
You dropped a lot of truths. You dropped a lot of truths on us last time, and obviously the audience loved it, so we had to bring you back. And it's been and since I think it's been at least 2 to 3 months since you were on our show. And obviously that was kind of near when everyone was like, all right, we're in a bear market, prepare, hunker down, make sure you got your firewood and stuff like that. Kind of overall macro conditions with crypto and everything right now. What are you kind of seeing out there?
Look, the macro. So let's start way out here and we'll zoom in. The macro, it's not great, right? We have the greatest global tightening of liquidity conditions in history. Now, the data is only 100 years old, so it's not like all of history, but we haven't had central banks everywhere really except since 1913. So a little over 100 years. And everyone, all the central banks are hiking interest rates, sucking liquidity out of the system. And that's because partly, they haven't really admitted it, but it's partly, or I would say mostly, because they fucked up after the lockdowns, right? They made the biggest policy error in the history of macro by over printing. And look, I will argue that was all part of the plan, right? That the lockdowns, part of the plan, weaponizing the flu, part of the plan, restricting movement, part of the plan, resetting supply chains, part of the plan. China is playing a different game to become the dominant superpower. And, we're all shaking our heads, wagging our fingers, saying, oh, but don't you do that. Yeah, right. Look, we sanctioned Russia recently. I'm going to digress for a second. We sanctioned Russia. What happens? The ruble, one of the strongest currencies in the world. Oil prices through the roof. Now they're coming down now, which you can expect pre-election. Oil prices are going to continue down right through the election because there's an inverse correlation between gas prices and presidential popularity. So the only chance the Dems have for even a reasonable showing, they're going to get crushed, but even a reasonable showing in November requires gas prices sub $3. And I think that's going to be tough, but I think they're going to shoot for it. So you have this whole alliance formed between China and Russia. And so they're denominating oil transactions in rubles and renminbi, not dollars. You was like, oh, but DXY is strong. Like, no, you idiots. That's because the other stuff is less good. It's like sitting down, I'm 6'3". If I stand up, I'm 5'11 and a half. People say, what happened? Like, I have no legs. So yeah, I can look tall if I sit down and sit up straight, but I'm not. And so if I hang out with people who are shorter than me, it doesn't make me tall. It just makes me less short. And that's not good, bad, or indifferent, but it doesn't make me tall. And so by saying we're better than the yen and we're better than the euro, which are more toilet papery than the dollar, that doesn't make us good. So from a macro perspective, all the central banks followed the cult of Kelton, this woman, Stephanie Kelton, who...
Anyway, modern monetary theory.
Modern monetary idiocy. Fuck theory. And I got to stop the F-bombs, but it's...
It's okay. We have somebody in the audience that is here for him. So
it's so bad. It's just so bad when people are allowed to spout something as theory with no proving, no testing, it's kind of like the jab, right? That is the greatest experiment in the history of medicine. Wasn't tested, wasn't, proven. It's being tested in real time. Same thing with modern monetary idiocy. It was never tested. And look, if it were simple to create wealth by printing money, wouldn't every country just do that?
Yep.
If you could get a money printer and print money, and we had, crypto for change for everyone, right? Or we had, C-will bucks for people all over, you do that, but you can't. Wealth is created by business formation, jobs, hard work, effort, converting energy to value. You don't print money to create wealth, but there's this weird dynamic around the world today that everyone believes that. So they made that mistake. Then they're like, oh shit, inflation. Well, it's not inflation. It's currency debauchery. It's currency debasement. So I use this example, right? My house, according to Zillow, went up 40% in the last 12 months. It's ridiculous. My house did not grow. My house did not get more efficient. My house actually wore out a little bit. I had to put money into it just to keep it, together. What happened is the money I price it in went down. And that's what's happening. So you have this monetary debasement. The central bank's like, oh, crap, especially the emerging markets who said, wait a second. If the Fed now is going to threaten to raise rates, well, what's that going to do? It's going to suck more liquidity out of emerging markets because they already raised. They were first to raise. So that's going to hurt my currency. So they're all falling all over themselves to raise rates to keep money in these emerging markets because they all made the mistake of trusting the IMF and the World Bank. Oh, we're from the government. We're here to help. Ha, ha, ha. We'll lend you money. But if you can't pay us, then we basically take over your country. And that's kind of what's happened over and over and over. So we have this sucking sound, not jobs going to Mexico, but this great sucking sound of liquidity coming out of the system. And that's bad for risk assets. And it's super bad for risk assets with leverage. So we had the greatest leverage in stock market history. So stocks, Peloton down 95%, Zoom down 90%, Shopify down 85%. MongoDB, right? This great, it's actually a decent product. The stock was just selling at crazy price, like down 24% today. So people are realizing that Stupidville, which was the level of pricing we got in stocks, can't exist. But what about crypto? Well, crypto has two problems. One, you had stupid people borrowing money and buying crypto on leverage. That's just dumb, right? Why would you take an 80 vol asset, Bitcoin, and lever it? Why would you do that?
And how much of this leverage do you think has already been sucked out of the market?
Okay. Now, that's why I think crypto winter's over. We're in crypto spring. Doesn't mean summer. Doesn't mean parabolic move. But I'll get to that in a second. That's a great question. It is the question. It's the point. Because in the stock market, liquidity started to get sucked out. People got afraid. Those things went down, and prices got down through July. Let's call or through mid-June. It was mid-June. It was June 13th. June 13th is the day. So through the summer solstice, stocks were down 20 to 30, depending on what type, and some were down more. And crypto was down 50 to 60 or more, right? Why? Two reasons. One, more leverage. There was more leverage per dollar in crypto than leverage per dollar in stocks. But more importantly, November, the powers that be, the SEC, approved a Bitcoin futures ETF, not a spot Bitcoin ETF, a futures ETF. And this is very, very important. Why did they not approve a spot ETF? Because a spot ETF would actually allow increased demand for that product. They don't want that, right? Because we're in the then they fight you phase. We talked about this, I think, last time. 2009, 2015, first they ignore you. You nerds, geeks, playing with your magic internet money. Who cares? Idiots, whatever. I ignore you. Then from 16 to 21, they laugh at you. Like, you guys are seriously still doing this? This is idiotic. You're nerds and geeks, and this is magic internet money. It's a Ponzi. It's a ha ha ha. 2022 to 2027, then they fight you. They're like, oh shit, this is real. Tens of billions of dollars came out of the traditional banking system in search of yield because they pushed interest rates to zero, converted from fiat into crypto, deposited at BlockFi and Celsius and all these other places, and got paid 6 to 8. If 100 million does that, nerds and geeks. A billion, well, rich nerds and geeks. 20 billion, the enemy. So now we are the enemy. And what happens to the enemy? You get fought. And so what do? Threaten to regulate, threaten to cut off the on-ramps and off-ramps, threaten to tax, throw a programmer in jail.
Yeah.
What happened in the Netherlands is one of the scariest things that's happened probably in the last 50 or 60 years. Someone commits code to open source. That code is used to create a product, and that person can go to jail?
Yeah,
That's
it's interesting that happens. And then you got guys like Do Kwon with Luna collapsing that are out here pretty much just creating on. And that was one of the biggest things we'd seen since like something like Bernie Madoff and losing investors' money. I mean, it is interesting the plays and the bigger strings that are being pulled on the global scale. So you definitely bring up a point there that is a scary thing.
All of that is so, but look, the good news, the last part of that quote, right? First they ignore you, then they laugh at you, then they fight you, then you win. We already won. If we're in the crypto sphere, we've already won because we've already seen the light, which is, we see the crypto light, which is this is an evolution of technology that's not going back in the bottle. The genie is not going back in the bottle. Every stock, every bond, every currency, every commodity, every piece of art, every case of fine wine, every collectible car, every private business, every piece of real estate, everything will be a token. All a token is an entry on a ledger. All of that will be on a blockchain. The blockchain will run the internet of value. The internet of value will do to financial services what the internet did to media and commerce. And all that market cap that was in the big media and commerce companies is now in internet companies. And all of that market cap of the financial services industry is going to end up in blockchain businesses. And that's okay, but they don't like it. And so they're going to fight.
So Mark, I have a question for you. Okay, cool. So you mentioned a couple things, and I want to try to tie it into your thesis that crypto spring might be upon us. So you talked about how, when rates were near zero, everybody was searching for yields, so they went to crypto. But now that rates are rising and the inverse correlation to the dollar strength, even though we did mention that the dollar strength is measured against a basket of kind of, not so great currencies. I mean, you've got the euro, the Japanese yen, and so forth. But as the Eurozone potentially might begin raising rates on their end, how do you figure the inverse correlation to the dollar, pairing that with the dollar strength? I believe it just hit a new high today, highest in like 20.2 years or something like that. And maybe can you speak a little bit to all of that and tie it into? Question. Yeah.
No,
awesome.
Look, it's an amazing question. That's why I love doing these shows, because answers, right? The guy talking, it's common, right? A lot of people have answers. Ask people a question, they'll give you an answer. What is rare in this world is to be able to formulate a really insightful, good question. That's rare. And our schools do it all backwards. They teach our kids to recite facts instead of teaching them how to critically think and problem solve. That's what we should teach, how to ask questions, right? A 4-year-old asks 200 questions a day. A 40-year-old asks 4. 200 is better than 4. Yep. And so constantly questioning is really important. And your question is critically important. So people have this ill-conceived notion that crypto and macro, particularly dollar and liquidity, are correlated or inversely correlated. It's spurious. It's like if you actually look at all the data in the world, the highest correlation to the S&P 500 is actually the price of butter in Botswana. Butter in Botswana. There's like a book written on this. Has nothing to do with the price of stocks. It just happens that stream of data, when you run it, has the highest correlation of any other thing. And so that's a spurious correlation. There are real correlations. Stocks and bonds are correlated 30, 35%. Why? Because equity and debt are dependent on the same factors for their return. GDP growth, interest rates, inflation, dividend policies, okay, corporate governance, same things. If a company decides to screw the bondholders, it makes the equity holders better off. If you guys screw the equity holders, it makes the bondholders better off. So they're very correlated. Hedge funds and stocks are correlated because most hedge funds own stocks. And most of the time they don't really hedge. They just are levered long and charging high fees. So there's a reason they're correlated. Bitcoin, okay, has 0.0 correlation to bonds over the 14-year life and 0.15 correlation to stocks. That's almost no correlation at all. Oh, but since November, that's spurious. Since November is the result of the relentless selling pressure, right? They approved the futures ETF. What did that do? It made people buy futures. Well, to buy a future, someone has to sell the future. Well, who's selling the future? BlackRock and Citadel and big black pools, dark pools. And so they're pushing the price down, spoofing the price relentlessly, just like they do to gold. Like JP Morgan got fined. Check this out. They got fined last year, $960 million. That's a lot of money, right? That was the fine for spoofing gold prices in the futures market. But they're like, yeah, but we made 20 billion, so it's like 5%.
Yeah, that's always my question. Like, they made so much money. It makes me think of Lance Armstrong, right? I was a big
Exactly.
fan.
Why did you take the drugs? Because the payoff is better than the risk.
Yep.
Yeah.
The fee is not that. The fine's not that bad.
It's like seeing these NFL players get fined, $10,000, $20,000 for wearing, different cleats on a game when, they make millions. They don't care.
Doesn't matter.
Exactly. And so it's all about incentives. And JT, to your point, the thing is, people have this belief that if the dollar's strong, currencies and commodities have to be weak. Well, no, the reason we forget, the thing we forget is we price assets in another asset. We price currencies in another asset, right? So stocks priced in dollars look really good, right? Nominally, stocks, not today, but over the past 10 years, they're up a lot. But if you price them in gold, which is money, right? No liability, no credit, no debt, the only money in the world other than Bitcoin, because Bitcoin is just digital gold. If you price it in gold, stocks are dead flat since 1996. One Bitcoin equals one Bitcoin. Has never changed, will never change. But we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars or yen or euros or like in Turkey. There's never been a bear market in Bitcoin, not ever. Because Bitcoin in lira goes like this. Because the lira is going in the toilet. Same thing with bolivars in Venezuela or pesos in Argentina. So it's all about the unit we compare to. And so this idea that short-term correlations matter, that's wrong. You need thousands of data points to get good correlation. Monthly correlations, I hate. That's as big a chart crime as when people show a long-term chart without log scale. And you see all these big hockey sticks.
Yeah.
Like, no. The difference from 0 to 10 is the same as 10 to 100. So don't show me a hockey stick over a long period of time. Give me a log scale and it'll look like a 45-degree line. It really won't be that big a deal. So I think to wind this back to where we are, we have this period of time where all the leverage in crypto, I think, got washed out in mid-June. Three Arrows Capital, all that stuff. Celsius shut their doors, all the bad stuff. That doesn't mean every single person with leverage is done, but the worst of it was gone. And Bitcoin prices, and I use Bitcoin as a proxy for everything right now, but Bitcoin prices got to the level of 3%. Only 3% of the time in history was Bitcoin lower relative to its long-term average than June 13th. And it's gone up, since then. So it's now in like the 6th percentile. Stocks, on the other hand, are still, after being down 20+%, are still in the 93rd percentile, most expensive they've ever been. So I did, mornings with Maria a couple weeks ago, and she said, isn't this the time we should all be buying stocks, tech stocks? Like, no. They're in the 93rd percentile. They should be in the 50th percentile. We should be back to fair value. So that means there's still a lot of downside.
Right now. Apple is doing great.
Apple's doing great?
Yeah, because it's like, closer to all-time highs, and it's a big, in the S&P 500. I wouldn't want
Well, here's
to
the problem with Apple. Apple's an anomaly, and it's the exception that proves the rule. Because you're right, in the short run, Apple looks good. Why? There's this massive amount of money from my generation, from the boomers, that went into 401ks, 403bs, into passive, into S&P 500 index funds. So Apple today is 7% of the S&P. So today, September 1st, today, just like every first of the month, all the money comes out of 401ks that people set years ago, right? They set it and forget it. They never look at it. They never change it. So all this money, billions of dollars, comes in, and it has to buy the S&P 500. Irregardless of the price, irregardless of up, down markets, has to buy it. And they have to put 7% in Apple. Here's the problem. Apple today, in the last 12 months, made the same amount of earnings, total earnings, as they did 6 years ago. They've had no growth for 6 years. Oh, Mark, the earnings per share is up a lot. Only because they bought back shares. They reduced the share count. That is financial engineering. You need to back that out to get the actual growth in earnings. So if something's growing 0, why would you pay 25 times earnings for it? Well, you shouldn't. Amazon's revenues have collapsed. Meta's went negative revenue growth at Meta. And that's why the stock is in the toilet. And Amazon is down 30% this year. And people aren't paying attention to how bad the decimation is at the macro level, right? In terms of spending and consumption, because they look at the retail sales number and say, but retail sales are up. Like, right, because that's priced nominally. They don't inflation adjust. So yes, we're paying $4 or $5 for gas instead of $2. And so it looks like we're spending more. That's not a good thing. We're probably buying less gas. In fact, miles driven is probably down, but the price for gas is up. So retail sales look up. It's like they don't adjust for population growth in retail sales either. So there are more people in America buying stuff, but they don't adjust for that. Why would you not adjust for that? You have to adjust.
Yes, as long as the population expands, we're always growing.
Of course.
Hey, so I just got a question to double back on a little bit, some more Bitcoin talk. Could you, if you mind, talking about like the attacks on Kathy Woods and Michael Saylor with Bitcoin? 'Cause I know he just, stepped down, and there's a lot of rumors spreading about what's happening. Another lawsuit. If you could speak on any of that.
Look, it's then they fight you, right? I mean, he made himself a target.
Yes.
Right. And I'm not saying that's good or bad. I'm just saying he did. He stepped up and said, I, as primary shareholder and manager of this business, I'm going to do something that y'all, right, in DC don't really like. You don't really think Bitcoin is real. You don't really think it's a good asset, but I'm going to put it on my balance sheet because you ruled that it's not a security. So I can do that. So I don't have to be regulated by the SEC. You ruled, and he played by the rules, and he did everything right. Now, this whole AG going after him for avoiding taxes, I have no idea. And I have this line that I learned when I first got in the business that tax avoidance, you should do at all costs. You should use structures and trusts and offshore and anything that's legal.
Right.
You should do to avoid paying tax.
What happened to Trump?
Okay. Tax evasion, bad. Bright line,
big difference.
Right? Yep. Not a dotted line, it's a bright line. Avoidance, good. Go right up to the line. Evasion, bad. So I can't comment on whether he did or didn't. I know that I try to pay as little tax as possible, just because I would rather not pay it than pay it. But it doesn't mean I don't pay tax. I do pay tax, but I want to pay as little as possible. So Kathy also made herself a target. And look, Kathy is a victim of her own success, right? Size is the enemy of alpha. It's hard to be great when you have a lot of money, and because the what happens is the opportunity set shrinks, right? If you're managing $100 million, there's lots of things you can buy. If you're managing $100 billion, there's fewer things you can buy. And look, and she's not guiltless here in the sense of, and I have great admiration and respect. I'm not saying anything negative about Kathy. However,
Kathy, I like.
However, no, here's the thing. I am not. This is a personal thing. I'm not a super concentrated person. I believe in diversification. I don't like portfolios that have, 13, 14% in Tesla. I think that's a bad plan. Now, it worked great for her, and she's richer than me. So maybe she's smart and I'm dumb. But I wouldn't do that. I would not do that. But she did. And it works when it works, but it's a momentum strategy.
Yeah.
And momentum strategies work great, back to this whole question about macro and the Fed. When the Fed is expanding liquidity, momentum, baby. Overweight Tesla, overweight Apple, just buy what the big boys are buying and don't worry about the price and hang on. But when momentum goes away and liquidity is contracting, and it's the escalator up, elevator down. And that's what we're seeing now is, look, I can make a case that companies like Tesla, Shopify, MongoDB, a whole bunch of others could go down 75% from here, not where they were, but from here, and still be expensive based on math. And if we get into a liquidation cycle, which I think is possible, and I've been talking about this, that, look, this is a big weekend. Sell in May and go away and don't come back till Labor Day actually is real. Because in the old days, right, brokers literally would go on holiday, because it was the UK and Europe, and they pretty much take holiday a lot of the summer. And then there was a big horse race on Labor Day, and they would come back after the race and they'd get back to work. And so what you tend to see is the markets are weak during the summer, and then they take off usually in the fourth quarter with the Santa Claus rally. Except the big down markets also happen in September and October. Why? Right? Mark Twain said October is the cruelest month for stocks, well, except for all the others. But October actually is, well, September's the worst, but October's a close second. Why? Because people come back. And this year, I don't know if you guys have noticed, this was the biggest vacation year of all vacation years. I mean, more weddings, more trips. I mean, I took more vacation this year than I've taken in 20 years because we were tired of being cooped up.
Yep.
Right.
And so now, and so that allowed these massive short squeezes to happen in July and August. And they were brutal, but now they're gone. If you were in the Bed Bath & Beyond, you're underwater. You're in AMC, you're underwater. You're in GameStop, you're underwater. Where the fuck to go? It's like that thing from South Park. And it's gone.
Yeah.
And it's gone.
Yeah.
So then one of the things then I would have, obviously, I have a lot of people who are kind of doing what you said earlier, the age and the group that's, just passively always put into their 401k, not really looked at it. Obviously now some people are looking more, asking, what should I be putting in? There's even one person there in the comments saying, they're starting to move some of theirs out of their 401k, out of the traditional, starting to speculate and kind of move into some, crypto assets, now that a lot of people think we've hit the bottom, right? And or maybe there's another capitulation event and some more, leverage that needs to get burned out of the market. We don't know yet. But what are some assets in the crypto sphere, outside of Bitcoin that, that you're kind of looking at to, you mentioned earlier that all these things are going to be tokenized, right? Like there's so much that can happen on the blockchain. And obviously, we're partial, us three are definitely, high on Algorand, which also is funny because I know one of your, the other guys you've done a couple of live appearances with, Scaramucci, just wrote a book.
Mooch is my buddy.
Yeah, he just wrote a book on Algorand.
He's a big dog. He's one of your
there it
big
is.
boys.
It's his book.
So,
I'm interested to see, what, from your perspective right now with what you see in the market. You've got some of the big ones that are out there. Some have high fees. Some are struggling to stay, keep the lights on. Others are chugging along, maybe smaller but growing.
Yeah.
What are you looking at right now in the overall crypto space?
Yep. So one, shout out to Dan A. Yes, if I grew up today, I would be on lithium. I have ADHD in the worst way, but I own it. I love it. I think it's what makes me better. I believe in minimum wasted energy. I don't like to, do too much at once. And yes, I will chase many ideas all at once. So shout out to Dan A. It's not a bad thing. And don't medicate it. Just go with it. Embrace it. So what am I looking at? So we just had this discussion on Monday about, every Monday we have our investment committee meetings, and I was on vacation for a week and I came back and so we had this exact conversation. So, our funds are 70% infrastructure, like equity investments in companies that do the exchanges and the software and the tools and all the things that you need, wallets and all the things that we think will be the future of financial services.
Right.
But then 30% of what we do is actually in the liquid protocols themselves. And over time, we have been big investors in Bitcoin, in Ethereum, in Solana, in the Graph, smaller in, handful of the other names. We've never really we've done a teeny tiny bit in Algorand. But let me explain why. So we started in 2018, and look, I was late. I told you the story last time. I got introduced to it the same month as the Winklevoss twins. They're multi-billionaires. I'm not, because I wasn't, in Ibiza with Charlie Shrem, getting baked. I thought, I don't understand this, and I need to do work. And it took me time to do work. I should have been in Ibiza getting baked because it would have been better. Yep. And but I wasn't. And so, and by the way, if you haven't read Bitcoin Billionaires, you should. It's just such a great book. And Mesrick is just a great writer. It's a quick, easy weekend read. Such a good book. But the thing is that in 2018, when we launched the digital fund, Bitcoin to us was a Series B, right? Meant it had easy 10x upside. Could be more, but easy 10x, Series B. ETH was a Series A, 100x upside. But you don't know for sure, but that's what we thought the potential was. And then the Graph and Solana were pre-seed investments, meaning they could even be bigger than that. They could be 1,000x if they did well. And there were a whole bunch of others, but those were the four we kind of focused on. By 2020, we made a mistake, right? Full disclosure, we made a mistake. I had a couple maxi partners, and we went all Bitcoin all the time, and we didn't do any of the DeFi stuff, and it pisses me off because I had other friends. They handed me synthetics on a silver platter. They handed me Illuvium on a silver platter. They handed me.
Illuvium was huge.
I mean, they handed me a bunch of stuff. And I'm like, no, we're out there being maxis and so, whatever. So today, to answer your question, I have resisted loading up on BTC, although I think I'm a dollar cost averager today. I just think you need to keep acquiring that as a core position. I'm in the persona non grata state with the ETH heads because I'm a buy the rumor, sell the news. I think the merge is already in the price. Everyone else says it's not. I think it is. I'm worried. I personally don't like proof of stake versus proof of work. I know other people do. I think proof of work is the most elegant way of establishing truth. But I think there are some other innovations that are interesting. So I'm not super long on it. But look, we have money with Travis Kling, who thinks we're going to 10K by the end of the year. And I love Travis. He's a smart guy. Since you guys had me on and since I've been talking to Mooch, I've spent more time on Algo. And I said, I like the tech. I like the leadership, although there's that change that I don't really understand. I need to know more about that. But I like the idea. I think the problem for all of us is ideas are not enough, right? Ideas need adoption, and what you guys do every day or every week or however often the show's on is great, right? Because it's increasing awareness, it's building community, and that's how you get adoption. And so I think that's why I support stuff like this. People say, why do you, because I'll go on a Bitcoin thing and people will say, you're a shitcoiner. You're talking to all these Ethereum or ALGO. Like, I own more Bitcoin than you. What are you talking about?
Right.
And then I'll go on something like this and people say, oh, you're a maxi. I'm like, but I own more Ethereum than you. And I mean, I don't own more Algorand than you, but maybe I need to fix that. But to answer the question completely, we've been nibbling at Bitcoin, haven't been nibbling at ETH. We're full up on Solana. I'm actually selling a little Solana. I really want to buy Avox, but I haven't yet. But I really, really, really want to, because I think it has some things that are superior to Solana in terms of, look, if you're doing gaming, 99.9%, no problem. Get a glitch over in the corner, no big deal. If you're doing accounting, I need 100%.
Yeah.
I can't have glitches. I can't have outages. So anyway, in the other place we are looking, and we didn't pull the trigger on Monday, although we probably will in the next week or so, is in the DEXs.
Okay.
Uni, I was, and this is where I blew it. So to be successful investing, you need three things: conviction, courage, and cash. And I had the conviction, I had the cash, but I wimped out on the courage. When Uni hit $3 or 368, hit 368. And we were talking about it. I'm like, the market cap is $3 billion. It's going to do $2 to $4 billion of cash flow this year. We have to buy it. But we wimped out. So now it's 6. I'm like, oh, but maybe it'll come back to 3. I'm like, stop talking and just act, because action beats words. So we'll probably buy some of the DEXs, and then we had discussion: is it just Uni, or is it Uni and Pancake and Sushi or something?
Right.
So we're looking at that. I said I and the team are spending time on Algo. Haven't come to a conclusion yet.
One thing kind of with what you were saying there about Algorand, obviously, a lot of the people in the Algo fam were, seeing the moves with the, CEO of the Inc., obviously CEO of the foundation. Obviously, Stacey Warden took that spot. Sean Ford stepped up as the CEO of the Inc. And obviously they've done great jobs, taking over those roles. And I think a lot of the Algorand community, this is maybe not a pitch to look into it, but what are your thoughts on something like FIFA reaching out and choosing Algorand as not only a sponsorship for the regional and to have the name brand and stuff like that, but also as a technical partnership? And we've heard rumors from Stacey Warden about, the ability for the wallets, FIFA Wallet Connect, and to be able to offer NFTs of players and all the things like that. I do know right now that over the past 2 to 3 months, Algorand NFTs have hit highs that they've not seen ever. So obviously it's been red hot. What are your thoughts on something like Algorand, where the tech is there, right? The team, obviously there's a little bit of mix up, but it still seems like it's solid. But then you have a massive organization like FIFA that could onboard, kind of like what you say, and bring in that mass adoption.
Well, that's how it's going to happen. Again, great insight on how reality works, right? We all have trusted brands. And I use the example of concerts, virtual concerts. Are you going to go to Decentraland's concert hall, or are you going to Madison Square Garden?
Right.
Yeah, Madison.
I'm probably going to MSG, but they don't have the tech yet. And what's really interesting to me is, and again, I'm not a big, electronic dance music guy, but Travis, famous guy, right, did the thing in Fortnite and had a couple million people watch. I mean, where can you do that? Nowhere. It's like the virtual world. But then I guess it's like hurting him, because people are like, oh, you're the Fortnite dude. That's not cool. Even my 11-year-old is like, Fortnite is old. Now I'm a Valorant guy.
Oh, wow.
Wow. okay.
Tides change fast in the gaming world.
It's crazy, and it's hard for me as a parent, because shooter games, I mean,
I don't like them.
I don't like them, right? I mean, I just don't like them. And I like the strategy part, and at least it's not like Call of Duty where you see the blood spattering everywhere.
Right.
At least, but Fortnite was, to me, the best because people just kind of vanished. They didn't really like in Valorant. They die. So I don't really love that. But anyway, my wife and my son argue about. He wants to say, my kill ratio. I'm like, and my wife says, no, your win ratio. You can call it win. Don't call it kills.
All bad.
And anyway, so I do think that brands matter, and I think something like FIFA is really big. I have a buddy in the industry that is doing a really interesting incentives thing with MLB.
Yeah,
and he's got a virtual kind of merchandise and ticketing and points system like airline miles, but doing it's called Pointsville for the MLB. You guys should actually have Gabor Gerbax, who's at Van Eck. You should have him on the show sometime. And I think that's really interesting because without the big organization to help advance the tech, I think it's going to be tough. It's kind of like why I'm upset, but I understand why Facebook's Libra, DM didn't work because the government didn't want it to. Because 3 billion people could have instantaneously had a gateway drug access to crypto, right?
Yeah.
They would have airdropped, DM'd everybody, which is, to me, the one thing that limits crypto is this, right? It's all concentrated in the hands of a small number of people. It needs to get down the pyramid.
Yeah.
And so for me, again, if I were doing it all over again, I'd airdrop it to everybody. And I guess there's this world currency. I can't remember. Is that the name of it?
WorldCoin?
Yeah, WorldCoin. But I'm not giving you my irises to dinner.
Yeah, that's weird to me, the iris thing.
It's just not happening. I mean, I've seen Minority Report, and I don't want the guy taking my eyeball to go get his share of the stuff. So I'm just not doing it. But I do like the idea of airdrop to everybody, kind of like they did in Russia with the vouchers. Now, the bad thing was the mafia then went around and kind of took people's vouchers, and the oligarchs got really rich again. But some people sold their vouchers before the mafia could get to them, and they made some money. So I do like that idea. But in absence of that, what we need are organizations that have a lot of reach, and certainly football, like real football, not like our football.
Right.
Football is maybe the best in the world because people care and people are super loyal. And so I do think that's a really good thing.
What are some, like, which company, I guess, out, that's out here right now? Obviously you have, Facebook, who rebranded as Meta. You have Amazon, who's hired, people, or roles to, fill in and start to bring in that adoption. What companies do you think are going to be the big ones that start to really usher in this movement away from, using, the dollar as much and maybe actually using points and your crypto and your wallet more than your bank account and stuff like that? I mean, Starbucks announced they're going cashless. They're also announcing, I think in a couple weeks, who they're going to partner with on a blockchain. Great
question. I don't think it's the big tech, right? I think the big tech monopolies had their run. Web 2 had its run, and now it's got to be Web 3. And Web 3, it's one of these weird words. Some people like it, some people don't. Like, I think, what was it, A16Z said, now we're going to Web 4. We're going to skip Web 3. It's like the
Gary V's like
9
Web 6.
doesn't exist. And
More like Web 2.5, really.
I know.
Right.
But the reality is, all we're really talking about is blockchains at the center of a decentralized world as opposed to databases at the center of a server world.
Yep.
That's what we're talking about.
Yeah.
And the server companies have been great, right? Amazon, Google, they're killing it, right? They're killing it. But that's the rental economy. We get rented, like our data gets sold and we rent time. We post our pictures on Instagram so we can look cool, and they steal our data. And I shouldn't say steal it. I mean, we give it to them, even though no one actually reads the thing that you sign, but they take it and they monetize it. In the future, I think a new world, a Web3 world, will be built that will do all of those things on chains. Now, whether it's a single chain world, right? Bitcoin, Lightning, level 3, level 4, a lot of people believe that. Maybe. Need a lot of work. Is there a multi-chain world, kind of like the internet world where you got TCP/IP, FTP, HTTP, SMTP? I think that's more likely, but okay, we can have that debate all day. But I think what's more likely to me is not the tech companies, but the brands, the Disneys, the FIFAs, the NBAs, the MLBs, get the trust and bring people to whatever tech they decide. And so I do think that isn't decided yet.
Yeah.
And so making bets in multiple of those where you can see this type of alliance being formed, I think is smart.
I do have a follow-up on this. Is more of like, what do you feel about interchain connections like Polkadot or Cosmos type of IBC ecosystem?
No, gosh, okay. See, this is where you're more technical than I am, and that's great. And I know just enough to be dangerous, and this is where I fall. But I've been not worried. I've been wondering about this, and to me, it's the $64 trillion question, which is the internet started as all these protocols. There were 80 of them. And it was really Tim Berners-Lee who made TCP/IP, which we're using right now to communicate, became the base layer, but he couldn't own it. And so then on top of that, we got FTP for files, and we got HTTP for websites, and SMTP for email, and www that kind of ties it all together. I can make a case, I think a pretty good case, that Bitcoin is kind of like TCP/IP. It's a base layer. Then you got Filecoin that kind of can do what FTP does. You got Ethereum, which is like a toolkit. And could there be multiple toolkits, Ethereum, Solana, maybe. But then it's these two intermediate layers. And I've been saying, is it Cosmos? Is it Polkadot? Is it Avalanche or Solana? And that's where I don't understand the tech quite well enough to know if those layers are really necessary and absolutely critical versus Bitcoin, Lightning, new L3, new L4, and all that just replaces. Because what we're trying to replace is Fedwire and ACH.
Yeah.
Right? We're trying to make the transfer of value seamless and easy. And I don't know if that requires interchanges and bridges and all the other stuff. I don't know. And that's where I said, I'm a financial services guy who, now is a venture capitalist, but I'm not a tech guy, venture capitalist. So I'm the guy who's saying that's a good idea to disrupt things that I've been seeing my whole career. I'm not the guy who's going to say, well, if you code this way and change it. So that's the part where I probably can't get to right now.
Yeah. Okay.
Yeah, and I know a lot of people in our audience want us to just keep plugging Algorand, but this isn't a debate on which crypto is the best. But I do want to ask before we close out our time here. How do you feel about the ongoing regulation debate between the CFTC and the SEC? And I believe SBF from FTX just recently hired another former commissioner from the CFTC. So there's a big push to get the CFTC to be regulating a lot of these assets. Where do you stand on that?
Regulation is what incumbents use to slow down disruptive innovation. And that has always been the case. Okay. And I use the example in New York City, turn of the century, there was something called the red flag law. You've all heard the term red flag, right? Where'd it come from? Well, the horse and buggy people didn't like horseless carriages. So they bribed the New York officials to pass a law that said if you had an automobile, a horseless carriage, you had to hire someone to walk in front of it with a red flag so everyone could see you coming. Not making that shit up, right? That was real. Now, have you ever seen someone walking in front of a car with a red flag? No. But that's where it came from. And so all of the regulatory stuff is intended to slow it, not speed it up. Now, the question on who should do it, the one thing I will, maybe the only thing I'll be positive about the Biden administration on, the executive order on crypto, and that's not a political statement, it's just, I think, irregardless of his leanings, his execution is horrible. I mean, horrible.
Agreed.
I mean, horrible. It's just horrible. And as bad as Trump's, and that's saying something, right? I mean, just horrible. But the executive order on crypto was good because what did he do? He said, you, different entities, collaborate and come back with a plan. Now, what that did is it created this, you give me, no, you give me, and they may tear the, patient apart. So for me, the SEC up to this point, and I'm not a big fan of the current guy, but the old guy, Jay Clayton, I admire. He was measured, he was prudent, and he was consistent. That's all you can ask from a regulator. Measured, prudent, and consistent. Because the worst thing is inconsistency, where it's up, you're down, it's just crazy. Gensler clearly has a different agenda, and he's a bankster, right? He is one of them, and they are paying him heavily to slow down the stream of money out of the banks into crypto. So that's fine. So then, well, since they deemed it not a security, it's a commodity, CFTC, clearly it should be under them, or the NFA, because it's all futures based. Fine. But again, let's just decide, let's be consistent. Is Bitcoin a security? No. Is it a currency? Yes. Is it a commodity? Yes. It is digital gold. Gold is a currency and a commodity. Who should regulate it? I don't know. It is a commodity for sure. Trades like a commodity, trades future, but it is a currency. It is the one money for 5,000 years, right? 5,000 years. It's the only consistent money. There have been monies that come and gone, 775 paper currencies in the history of the world, 3/4 of them are dead, long gone. Money, gold has been money for 5,000 years because the only asset that exists in the absence of a liability. So Bitcoin is the same. Go down to Ethereum. Is it security? They deemed it not. The airdrop, maybe. You could argue, but it doesn't really matter because its use cases are not security. Its use cases are more like technology, right? Is Google a security? www. a security? I don't think so. So I think that's a little different. Is Dash a security? Okay, that one's tougher, right? Dash is something that's used for medium exchange, but in Venezuela, not in the United States. So, what do you do? I think it's such a good question. I don't have a really good answer. Like I said, questions are more important than answers.
That's totally fair. Yeah, that's totally fair. Honestly, it's an interesting question because, as you pointed out, there's a gray area between a lot of these cryptos. On if you just use the Howey test for example, there's a gray area on a lot of these cryptos where, at least on number 4, I think on number 1, 2s, and 3, but the fourth one is the expectation
was for oranges, right?
Exactly. Exactly. That's really the point because it creates such a gray, such that gray zone that you really can't have a good answer.
We're really good at using 70, 80, 90-year-old rules to try to legislate modern era. Yeah. It's just stupid, right? We have the 1940s Act. Think about that. The 1940s Act governs securities in 2020. The 40 Act was written in response to the Great Depression.
Yeah.
Now, I can make an argument that we're on the verge of the next Great Depression. We're one policy error away, right? We had one in the 1840s, 90 years later, because it's a 90-year cycle, the 1930s, and the 2020s. And that 90-year cycle is one generation because people forget the sins of the past generation and they have to repeat them. And we made the same policy errors, right? Smoot-Hawley, tariffs, and we constricted money supply into the Great Depression. That's what we're doing now. Right? We had the tariffs from Trump, and now we're restricting money supply. So we are this close to causing a depression. And look at gas prices in Europe, and you might say we're already there.
So are we in a recession?
Shut down. Pardon?
Are we in a recession? Because we know the Fed is trying to change definitions.
Well, we're definitely we're in a recession for sure. But that has to be declared by NBER.
Yep.
And they have 6 criteria. 5 say recession, but employment doesn't. So they're hanging their hat on that and saying, I don't have to declare. But here's the thing. The employment numbers are made up, literally made up. They use something called the birth-death ratio. And they've been doing this forever. It's not like a new thing. They say you're X months into an expansion. This many companies should form, on average, this many companies should die, birth, death. Therefore, there should be this many new employees. So you didn't count the employees? Well, no, that'd be too hard. You didn't actually look at their payroll taxes, which would be really kind of easy. Oh, no, that'd be too complicated. So you just made it up. Yeah, 75% of the number that got reported this morning is just made up. And so that is seemingly a specious way to say we're not in a recession if the other 5, industrial production, sales, everything else is going down. So look, I'll argue we're in a recession. Now, a recession could be like an 01 recession, which you barely felt it. And other than 9/11, it would have been almost imperceptible. Or it could be an 08, 09, Great Recession. Or it could be a 1931-32 depression. But that's all about policy.
Yeah.
All right, one more hot take.
We have crappy leadership. So the odds favor worse over better, unfortunately.
Can we get one more hot take? The student loan debt relief.
Oh, God. Stop. I mean, every liability is someone else's asset. So how do you forgive a liability if someone else owns that asset? Well, the government bought them all, so the government's just eating it. Oh, okay. So where are you going to get that money? Taxes. Well, so who are you going to tax? Well, rich people. Well, most people. So we're going to tax a bunch of people so that some people can get forgiven on student loans that maybe or maybe not they shouldn't have taken out, right? If you can't afford it, maybe you shouldn't. But I will say, Sewell, that I changed a little bit. My wife's really the other side of me on this, and I'm adamant, right? Forgiving an obligation is wrong. It's a bad incentive because you then incent people to go out and do stupid stuff knowing they're going to get forgiven. In Jewish law, there's something called, I'm going to forget the word, but every 49 years, I think that's right, every 49 years, they would forgive all debts. So in the 47th, 48th year, what did everybody do? Went out and borrowed as much money as possible because they knew that they were going to get forgiven. So now, what my wife says is, well, no, what happened was when Reagan was president, he had this advisor who said, here's the problem. If we keep education low cost, then we will end up with an educated proletariat. And we can't have that.
Yep.
Because remember, when the framers set this up, not everybody voted. Landholders voted. Women didn't vote. White gentry voted.
Yep.
Because they were the only educated. So now, as everyone's gotten more educated, everyone's got more equal, still not equal, still bad, but more equal, they were worried that we're going to have an educated proletariat. So they said, we're going to increase the cost of school. No more free public education. And California and New York abolished free education. So then these enterprising companies said, well, we'll lend you the money. You can go get educated, you can get a technical degree. Now, people will argue, well, that was predatory because it was predatory toward people of color and lower incomes. There's probably some truth to that, probably a lot of truth to that. But here's the thing. If you did the forgiveness with some criteria, like if you took out a loan and you got went to plumbing school and now you're making 85 grand a year, you don't get forgiveness. If you went to plumbing school and you flunked out and now your job is, grocery bagger and you're making 20,000 a year, I'll forgive that loan because you've had some hard times.
Yep.
Now, let's call that what it is. That's buying a vote.
Yeah.
It's buying a vote.
Yeah.
Because that's what dictators do. Dictators get in power. They give all the stuff to their friends, their cronies. They go from capitalism to cronyism. then they devalue the currency, make prices of everything go up. So their assets that they own go up because the rich people own stuff. Average person doesn't own stuff. They rent their house, they rent their car. I mean, they own it, but they're paying 20% interest.
We own the loan, the rights to pay the loan.
Yeah. So right, own equals right to pay a loan. Yeah, exactly. And so we have this system that is really pretty bad. And so I would say, well, how do those people vote for those people? Free stuff. In Argentina, they give away free electricity. In Venezuela, they gave out checks, right? We gave out incentives, around the lockdowns. Now we're going to buy off people's debt. So that's a long-winded way of saying, I believe in a social safety net.
Yeah.
100% believe that if you try and you fail, you should get taken care of by the community. That's what insurance is, right? If we all put our car payments together, our car insurance payments together, and we all insure everybody else, not everybody gets in an accident, it all works. If we all try to insure our own car, it doesn't work. Same thing here. Social Security, right? I put money into Social Security every month like everybody else, but touch wood, I'm okay. I should never get Social Security. I should never get it, right? It's like if you pay insurance on your house and your house doesn't burn down, you don't get the premiums back. But the problem is the company actually invests the premiums. So if we ran these entitlement programs like businesses, like Singapore does, where they actually invest the money in the interim, then they would work. And so we could provide a safety net and we could provide free education for the masses. And then higher education you'd have to pay for, and super higher education you'd really have to pay for. And the thing is, there's an inverse correlation between the most educated and compensation, right? Think about it. A++ students, what do they become? Professors. Good job, but you don't get super rich being a professor, okay? B students go to law school, med school, whatever, or A students go to med school, law school, okay? B students get jobs. What do the C and D students do? They either work for the other people or they start companies and they're super successful. And they become, in fact, there's a cool stat. There's an inverse relationship between your grades in college and the gifts. So the lower your grades, the bigger the gifts, which makes perfect sense, right? Because again, professors don't give a lot back because they work for the university. And the people who had to form a company and they, formed a trucking company that turned into a big deal and they sold it and they make a big gift. So anyway, that's a long answer. Simple question.
You answered it well. And obviously, to kind of sum up, all of kind of what we've talked about, we talked about how, where we're currently at in the market. Obviously, there's still a lot of macro conditions that could lead us into a, depression. We're pretty much in a recession. And so, I know there's a lot of people out here that are looking for, something to invest their money in during this time, because like you said, we're still in the then they fight you phase. And we're probably still going to be in that for the next, till, you say 2027. And maybe during that time is where we see all this new legislation and the new regulation come out to make the bigger money, come into this space. Obviously, the winners are going to be picked, and the protocols of the blockchains, whichever ones they are going to be the backbone of the new financial rails and the new, ability to move value and move money. And then it's then we win, right? And obviously, you would say we've already won, especially if you're holding, you would say Bitcoin. I know a lot of our people in the audience would say ALGO.
I would say any of the coins that are based on real technology.
Yeah.
Okay. The dog coins, they're going to zero. They're going to zero. And it was, oh, you're an idiot. No, they're not. They're worthless.
Yeah.
And the fact is, things can be worthless and go up in value for some short period of time. I mean, there's plenty of art. There's plenty of art that defies it. Right? There's no accounting for taste, but scarcity does allow some things to go. And as long as there are more people that listen to Elon Musk's drivel and buy Doge, then it will go up. But at the end of the day, it has no use case. It has no tech. It has no developers. It has no nothing. And Shiba's worse. And so I said that the current bear market couldn't end until those went to zero. And I kind of regret that, because I actually don't think they're going to go to zero. And I do think the bear market's over. But that means we're in the spring. We're not in summer, right? Summer is the next parabolic.
9 months
away. Pardon?
Trading sideways.
I think we do a lot of this. Think about spring. What is spring? Hot one day, cold one day, windy, blustery, wet, muddy, kind of gross.
Yeah.
And you kind of have to make your way through. And then you get to summer and life is easy. And so, March, April next year, my guess is we'll be back to summer, and then we'll be anticipating the halving, and life will be better because we are in these cycles.
Yep. Yeah. I mean, and that's, that's the way it goes. And obviously JT, his internet cut out there for anybody who was wondering. So, but we do have him back at least for right now, but I'm going to go ahead and close it out. I just want to say, Mark, thanks so much for coming on our show. Obviously speaking a lot of truth to our viewers, to us, and just engaging in fun conversation about the crypto markets, the greater, global markets that we're in. And obviously we will look to have you back on again, hopefully next time. If it times out right, maybe it's around November, maybe we'll have you on during when Algorand and whatnot is doing live with the FIFA administration, and we'll see.
Let's do it. I said I've committed to y'all that I will continue to explore. I will continue to, if Mooch sends me a signed copy of his book, which he should, since we're supposedly friends. Yeah. Where's my book, Mooch? Mooch, where is my book?
All right, we're going to clip that. We're going to tag him in it. He's going to get you a signed copy.
Where is my book?
You can always fly out at the end of November. Algorand's going to be in Dubai. That's where they're having their big event for Decipher. Mooch is going to be there. I mean, obviously a lot of other players. Michael Arrington is another one. And who knows, honestly, who else will be out there. But
let's talk about that. But look, and someday we should have Mooch and I on together, because look, we are frenemies and competitors and friends, and I love doing stuff with him. But here's the thing. He and others in what I call the OMGs, we're the old macro guys. So Dan Moorhead, Novogratz, John Burbank. I mean, there's a whole bunch of us. Dan Tapiero, and so there's a whole bunch of us in our 50s that kind of all came to this crypto light because we lived through these tech cycles. And we had the aha moment that what we're talking about is the operating system for the internet of value, for the truth net. And we're replacing trust with truth, and that's going to happen. And whether it happens with a single chain or multi-chain, that's the cool part that we're all trying to figure out together. So I will leave you with this. Someone said that, I'm a Notre Dame guy. I got the Fighting Irish behind me. I'm supposed to give an estimate for this weekend at the Horseshoe. I'm doing an AMA at 3:00. And we do this around the world with Yusko every couple of weeks. And so I'm doing an AMA kind of end of summer thing. And I said, the only thing you can't ask me is what's going to happen with the Irish at Columbus, because I know two things. I know that playing at Columbus sucks. It's just really hard for any team. The fans are unruly. It's it's a hostile environment, and Ohio State's a good team. Because they cheat. No, they're a good team. And the other thing I know is, as usual, we have a young, unproven coach who everybody loves. I mean, everybody loves this guy. I mean, my wife and daughter are in love with the guy. My wife would leave me for Marcus Freeman. I mean, I'd leave me for Marcus Freeman. I mean, he's everything you want to be. He's good looking. He's buff. He's smart. He's likable. The team loves him. But we got our ass kicked against OSU. And look, Mullet Man is a decent coach, but he's not a great coach. So we shouldn't have lost to OSU, especially with a 3-touchdown lead. So I just am nervous, and I will cheer for my Irish, and I will be really, really happy if we win, but I'm not going to make a prediction.
Well, on that note, Mark, we will let you get out of here so you can get ready for that AMA. Obviously, I'm not really partial to any teams on that note, but hey, I love that football is back, so excited for that. But everybody in the comments, make sure to go hit like, subscribe. Make sure to follow Mark on Twitter as well. He's been very busy since getting back, this summer, and he's live almost anywhere and everywhere, talking, greater macroeconomics. So tons of stuff to learn from him. And thanks for tuning in, and we'll see you guys next week.
All right. Thanks for having me, guys. Talk to you soon.
Peace.
We'll see if JT's internet will. He's frozen.
He's frozen there.
But yeah, you're good to head out, Mark.
Right,
we're gonna have to clip it.
I just closed the tab.
Yeah,
All right, be well, guys.
All right, peace, Mark.
See ya.
This will be one of the funniest things where we just have like we're still live, and all we do is we have just JT's face sitting right there.
Yeah,
he's got some internet from Crypto Nerd today.
Exactly, man. My internet was bad too. I had to switch out my laptop and everything.
Yeah, well, my little man, he has finally woke up, so I am peacing out.
Okay.
So, I don't know if you want to stay here until JT comes back to close it out, but again, thanks anybody who is here, and we'll see you guys next week. There he is.
Oh, there, JT.